Hey everybody, my name is Jason. You're watching Bull, Boom, Bear, Bust, also known as BX4. And it's time to again talk about holiday shopping. Today's December 6th. We're just a couple weeks away from Christmas, closer to 3 weeks away, but you get my point. Credit card spending has skyrocketed. The number of credit cards has exploded beyond the all-time high that we saw back during the financial crisis. And buy now, pay later programs are seeing a big increase. And what that means is more people are buying these items and getting an introductory rate or a financing rate directly from the seller, who in many cases have their own financial divisions. Other times they'll hand it off to a partner company, but 7% of shoppers say they're going to use buy now, pay later payment methods for holiday shopping. Now that's up nearly 30% from last year. But here's the thing. They're not even talking about credit cards. They're talking about financing. When you buy a mattress, for example, like a Firm or Purple, they'll have their own financing, right? So it's bad enough that people are running up record credit card debt. But when you think about it, credit cards are the same thing. They're buy now, pay later. You're not paying everything now when you put something on a credit card. You might be able to pay it off each month if you're lucky, or if you've made good financial moves, you can pay it off in full each month. But we talk a lot here about how credit card debt's at an all-time high, but this doesn't even count all these other newer ways of financing purchases. And this is especially popular among younger shoppers. The people that are buried mostly are the biggest student loan debt, the people that typically make the lowest wages and are getting out of school in some cases to see some just astronomical prices when you look at housing and just the cost of living in general, and prices continually rising. So when we talk about credit card debt being at an all-time high, it's even worse than that because there's so many other new financial financing means that are being used a lot more heavily here recently. All right, but it gets worse. It gets even worse. Now that people are in all-time high debt, all-time high credit card debt, the interest rates on the credit card has done something very interesting. Take a look. Credit card interest rates are near all-time highs, even though we're still close to rock bottom on the Fed funds rate. So as we can see, the banks, the lenders, the credit card companies, they don't always follow the Fed funds rate. And being that a credit card is unsecured debt, the banks are going to be more likely to charge a much higher interest rates. Of course, your home, your car, if you stop making those payments, the bank's going to have something to come and take back from you. But with credit cards, they're going to charge you a much higher interest rate. But isn't it interesting now that we're at all-time high credit card debt, that now interest rates on these cards are about all-time, close to being all-time highs as well. Over the past 2 quarters, the average annual percentage rate has grown from 15.91 to 17.13. So we're just about at the all-time record high, and this is the average credit card rate. Some of them are higher, but this is the average. All-time high was 17.14. So we're going to be passing that very, very soon. Right? This is a ticking financial time bomb waiting to go off, and it will go off at some point. We're already starting to see foreclosures increase in the housing market. We'll have to see what kind of response is done. Because of that, maybe they'll lower mortgage rates again. Maybe the Fed will come in with more heavy hands. You know how that goes. Also, this is out of Axios. The number of credit cards in the U.S., it's all-time high. And we look at the chart here, we see the financial crisis, we saw a big uptick and it peaked out. And we did see a drop at the beginning of the health crisis, but now here we are again, a new all-time high with the number of open credit cards. So it's not just the credit card debt that's all-time highs, it's the number of credit cards. Now, if people were to simply refuse to go into debt, refuse to borrow money, refuse to buy now, pay later, then prices would have to come down, even with the supply shortages, because companies, they're not just going to sit on unlimited amounts of inventory. They're going to lower the prices until they move it. But if products are being moved off the shelves, if inventory is moving out of the door, there's no way that the prices are going to come down. So that's the problem. When you have unlimited amounts of lending, when you have banks that can loan out endless amounts of money, you're going to see this rising price problem continue, and nothing's being really done to reverse the situation. We know the Fed's out there, they're talking about tapering. Tapering doesn't mean much. How much are they going to taper? Right? It could be a drop of water in an ocean as far as the amount of tapering that they're going to do. They're not making it really clear on exactly how much tapering they're going to do. So they're still going to be buying everything under the sun, but they might leave out a couple breadcrumbs, if you know what I'm talking about. All right, and let's touch on this again. We talked about this a few weeks ago. Total household debt now climbs over $15 trillion. That was the end of the third quarter, driven by new extensions of credit. New extensions of credit. Right? So companies are finding more ways to get people to buy now, pay later. We're seeing more people go to payday loans, which are very dangerous with very high interest rates. All right, but look what it says here. This is out of the Axios article again here. There was a big plunge of more than 100 million credit cards between 2008, 2010, the financial crisis. But now we've more than made up for that decline and surpassed that. So it looks like nobody's really planning for any sort of downturn in the economy. People are reactionary. They're not, for the most part, they're not trying to get out in front of this. And when the economy finally does hit the skids, which it already has been, it's just being covered up and being masked, and it's being propped up and manipulated. But when it finally is noticeable where everyone's going to realize what's happening, that's when people will finally pull back on their spending, pull back on their credit cards. But they always wait. Most people wait until it's too late. Most people are not going to be prepared for this. And yes, I think we're going to see another crisis in the housing market and the debt markets. How the banks respond, how the money printers respond is going to determine how it's all going to end up. But we know it's going to be a lot of pain for people that were not prepared for this. All right, let's talk about gas prices real quick before we wrap this one up here. We did see a decline from the, and this is the national average, which hit about $3.42 nationally, a slight decline down to about $3.29 a gallon. Now we bring San Diego gas prices into the picture here. Same thing, we hit an all-time high of about $4.66, dropped barely, maybe a penny, down to about $4.65 average here in San Diego. So it's getting tougher and tougher, folks, for people out there that have to commute, the working class especially. They're going to try to take more of what you earn, trying to tell you that you have to pay for all the spending and all of these stimulus packages, etc. And we're headed towards another bankruptcy crisis as well. It's just a matter of time, but look at all the things they're doing to kick the can down the road. It's not going to end well. I'll continue to prepare people. Big sell-off in cryptos. I've been buying cryptos here on the dip. That's why it's good to have some cash, right? You don't want to be in all cash because you're going to get chewed up by inflation. But if you're all in the markets and then there's a pullback or correction, and it doesn't matter what you're talking about. If you're talking about the stock market, maybe you're talking about the housing market, when prices do correct or come down, which we're seeing right now in the cryptos, then you want to have some cash to be able to buy some. So continue to use caution, prepare, invest wisely. Stay safe, folks. Keep stacking. Bye for now. Peace.